Good morning. I'm Ryan Lehman, and this is Markets in a Minute for the week of February 23rd. Although last week was cut short by the President's Day holiday on Monday, we did get a slew of market-moving economic data and geopolitical news. But before I address the elephant in the room, which is the Supreme Court tariff decision, why don't we go ahead and start with the economy? So Friday morning, we got looks at both Q4 GDP and PCE. And on the inflation front, the numbers were generally hot across the board. On a month-over-month basis, both the core and headline numbers came in a tick hot at 0.4%. For the headline number, this was the highest reading since early last year, and it appears to be driven by rising prices for durable goods and recreation services. Now, you'd normally expect to see a spike in rates following such a report, but the Q4 GDP number came in relatively soft with an annualized reading of just 1.4% compared to an estimate of 2.8%. Now, the key question here is how much did last year's government shutdown play a role in this number? Well, it appears to be pretty meaningful, with government spending detracting nearly a full point from the Q4 read. We also saw weakness in the consumer on a quarter-over-quarter basis, although consumer spending, it was still positive in Q4. So, in summary, investors may want to take this reading with a bit of a grain of salt because even though it wasn't great, it was by no means a clean report. Now, on Friday, all of this was overshadowed later in the day by this historic Supreme Court decision, which ruled that President Trump overstepped his executive power by using the International Emergency Economic Powers Act, or IEPA, to enact broad-based tariffs. To the surprise of many, equity markets actually rallied on the news, with the decision pretty largely being priced in at this point. But the big question is, what implications will this have as we look ahead? Well, first, there are clear financial impacts, given that some estimate that we've brought in over $300 billion in tariff revenue since Liberation Day. That hole is going to need to be plugged by either additional borrowing by the Treasury or other avenues to keep those tariffs in place, and the administration is already working on the latter. Now, there's also the question of potential refunds for the companies that have already paid tariffs, but this is most likely going to be tied up in the courts for a number of years. Now, from an economic perspective, there are clearly some important implications here. Now, if we start with inflation, on the inflation front, a removal or reduction in tariffs is likely going to ease future price increases, as those companies that have delayed price hikes no longer need to do so to protect profit margins. And then on margins, we could actually see a meaningful benefit to future earnings streams for both domestic and foreign companies who have already raised prices to account for the impact of tariffs, which now may be reduced or even potentially eliminated. And we saw this priced into markets on Friday with stocks of automakers, luxury retailers, and other tariff-sensitive stocks rising on the news. Now, there are numerous other items to address here, but just for the sake of time this morning, we'll leave it there. But we will be sure to revisit all of these topics and more as the situation here evolves. Now, if we look ahead to this week, we'll get a look at some consumer-related economic data as well as PPI. However, all eyes are going to be on NVIDIA, who is basically going to close out earnings season on Wednesday with their bellwether earnings release after the bell. And with that, I want to thank you for watching Markets in a Minute this week. Don't forget to like, share, and subscribe to get notifications for future video content. I hope you have a great week.